Hey guys, what's going on? Welcome into the video. So over the past couple weeks, the market has had a very strong bounce back, and with this bounce, it has taken a lot of heavily beat down stocks and turned them into charts that look to be setting up for very strong reversals. In this video, we're going to be looking at 3 of those heavily beat down stocks that look to be setting up for some massive breakout and reversal moves. Alright, so getting into it, first up is Marqueta, ticker symbol MQ. So this is currently about a $6 billion market cap company, and it's obviously a heavily beat down stock, down about 60% in just the past year. The company has done nothing but continuously impress and beat earnings expectations, but they're in a hyper growth phase and currently unprofitable, which is obviously why it's been so heavily sold off in the current market condition. But when the market does start favoring growth stocks again, which seems like it is starting to happen, stocks like this one are bound to bounce back big time. Also, real quick, every stock that I talk about in this video are companies that are in great financial position and on the upward growth trajectory. In this video, technical setups are the main focus, and we won't be going over too many financial numbers for time's sake, but these breakout/reversal moves will only sustain for the companies with strong fundamentals, so that is a big focus with these stocks as well. Alright, so now taking a look at the technical chart for MQ, it has been forming this large base of support for about 3 months and looks primed for an explosive move out of this consolidation. The gray line on the chart is the 50-day moving average, and the stock reclaimed above that for the first time since early November, and that happened this past week, which is a very bullish sign for the beginning of a reversal to play out. It's been continuously getting rejected above 12, but it does look primed to break out above that $12 level, so a break and hold above that $12 resistance can result in that breakout and start of the reversal with the target level above at the next resistance at around $16 per share. For breakout traders, you can wait for a confirmed break and hold above that $12 level and then enter with a tight stop loss right below $12 in case it does turn into a false breakout. For higher risk and higher reward, another strategy to enter this trade can be to enter around the current price to anticipate the breakout move before it happens, and with a stop loss either below the $10 psychological level or below those all-time lows at $8.24, depending on your personal risk tolerance and what you're looking for out of the trade. Alright, so that's MQ. Taking a look at the next setup we're going to be looking at is with a DLocal, ticker symbol DLO stock. So this company has a $9 billion market cap and is a company in the emerging markets payment sector. So it's a very profitable company in hyper growth mode and recently gave great earnings. I want to highlight that net retention rate of 219% in the full year of 2021 and 198% in the fourth quarter. Net retention rate measures how much their current customers are spending with them year over year. So essentially all of their current customers are spending 2 times the amount year over year. It's just a super sticky business model overall and essentially has unlimited growth as these massive companies move into emerging markets to acquire more customers and grow more. Some of their customers, for example, include Amazon, Microsoft, Nike, Spotify, Dropbox, and more. Now taking a look at the technical setup on this one, we can see that it recently broke out of the falling wedge pattern that has been forming since August. One important thing on this one is there was huge volume when it broke out and very little volume in the past 5 trading days when it's been pulling back. That can tell us that buyers are strong right now and sellers are weak. When that buying pressure comes back, it can result in the next leg up and further breakout and reversal move. For this setup, it's important to hold above that $30 price level as support along with the 50-day moving average. If it can hold that area of support, this one looks primed for the next leg up after breaking out. For the next leg up, a break above that 35 to 38 zone of resistance would send the stock into the gap fill up to around $45 per share, which would be the overall target level and about a 50% move from current price. So great risk reward. And also the best part about this setup is you can limit your risk to just 2% if the setup breaks the other way. A break and hold below the $30 support can be the signal to cut loss in this trade and just wait on the sideline until it either reclaims above $30 per share or pulls back to the next support at around $27 per share. Watch for that one to hold, re-enter if it holds, or stay patient if that one was to break down as well. But in my opinion, this one is looking primed for the next leg up. It made that big move after the earnings announcement, healthy pullback in the past few days to cool off after being overbought, and does look ready for more upside if that $30 price level can hold. Okay, so the final reversal setup we're going to be taking a look at is Teladoc, ticker symbol TDOC stock. So as many know, this one had one of the biggest drops over the past year in the entire market, and that's for a couple reasons. First up, it's currently unprofitable, which anything losing money is unfavored in current market conditions, as we see that is slowly changing though. Number 2 is that it has been looked at as a COVID stock, where some believe the growth potential has deteriorated and the best of this company is behind it. And number 3 is that it's one of the largest holdings in the ARK ETFs, which has exposed it to a crazy amount of selling from outflows and also short selling from people shorting ARK, buying SARK, everything like that. At this valuation though, after this huge drop, the stock is looking very attractive in my opinion, and the company has hit all earnings guidance and expectations so far. The stock price tells a much different story than how this company has performed. When the stock price movement doesn't reflect fundamentals, those are opportunities that you want to take advantage of. So we can take a quick look at the financials and future estimates. They're currently free cash flow positive, but not expected to reach full profitability until 2024. But overall, consistent 20% plus revenue growth is expected. And if you look at those earnings per share, EPS, and net income numbers 3 to 4 years out from now, the stock does not look expensive at all. It actually looks pretty cheap if the company executes on those numbers. And the future growth of the telehealth sector is also very underrated in my personal opinion. Alright, so now taking a look at the technicals, we can see that the stock is trading at 2018 price levels, which is pretty wild, way before any of their massive growth boosted by the pandemic happened. The stock is now trying to break out of that downtrend, and you can see that breakout move on a break and hold above $70 per share, which is currently acting as key resistance. The 50-day moving average is also right at that 70 per share mark and has acted as resistance all the way on the way down during this downtrend. If it can break and hold above the 50-day, that likely triggers the start of the reversal move. The target levels I'm watching for above would be at 80, 87, and then $100 per share. The ideal setup that I'm watching for this one to play out is to enter on a break and hold above that $70 level, and once that breakout happens, you can set a tight stop loss below in case it drops right back below 70 and fails the breakout. So you want to have some protection from that false breakout in case that is what happened. But overall, this is just a stock and a setup with great risk reward. Personally, I would wait to enter until it confirms above $70 and closes above the 50-day moving average. But to each their own, make sure to have your own thesis and plan before entering any trade. So those are 3 of the top stocks that I'm watching for the month of April that are setting up for potential massive breakout and reversal moves. All of these are heavily beat down 60% plus from highs. If the market can hold this bounce back like we've seen in the past couple weeks, these specific stocks could be setting up for some major breakout moves. Always make sure though to have your own thesis and plan before entering any trade. It's not financial advice. I'm not telling you to buy these stocks. I'm just throwing out ideas and sharing what stocks I'm personally watching for this month and beyond. So I hope you guys enjoyed. Hope I provided some value to you. If so, make sure to hit that like button and subscribe button. I would greatly appreciate that and helps me out a lot. For anybody interested in joining the private Discord chat, getting buy and sell alerts anytime I make a move, nightly watch list, and I answer any questions you have, that's the first link down in the description. And thanks so much for watching all the way through, guys. Really do appreciate it. And I'll catch you all next time. Peace out.